Hello and good morning, everybody. You're with Martin Penniff, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. As usual, I'm going to cover what happened with the major indices worldwide first. Starting with the US markets, the Nasdaq is strongly heading to its 12 years high, but keeping a healthy level above the 4,000 points limit. Currently staying at daily resistance level at 40-50 points, and it's going to hold, at least it looks like it. The Dow Jones had a few consecutive days of losses, where we saw a decline on the charts of about 150 pips, and heading for a slight reversal by today's trading day based on our technical analysis. The commodity trading S&P 500 is on the same path as the Dow, with 3 consecutive days in decline, wiping over 20 pips, and looking for a reversal correction today. The European markets, starting with the German DAX, where we saw a decline of 120 pips, a little bit over that. Over the last 2 trading days, the French CAC 40 has also been under pressure, and has shown some positive signs from the start of the day today. Now, all eyes on Mr. Draghi. He has announced this week, on the 18th of September to be precise, the asset purchase and bank lending program of the European Central Bank is starting, and as the man himself stated, this should enforce larger liquidity in the banking systems in the old continent. The economists are a bit concerned though, as the target seems a bit of a stretch, heading for over 1 trillion euros, as what the levels were back in 2012. Moving to the Empire, the British Empire, the FTSE 100 in UK is holding positive levels, and has moved up with roughly 10 points since the start of the trading day today. Asian markets, the Japanese Nikkei is heading to its highest level from the start of the year at 16,000 points. However, on daily base trade, it had a bit of a decline during the night, and is looking at a reversal to the downside in the upcoming week. The Chinese Shanghai main index had a slight decline over the night, and also the Hang Seng index in Hong Kong. The decline was around 150 pips so far. The Pacific, if we look at the Lend Down Under, where the main index has suffered some losses around 45 pips, along with the New Zealand 50 index, with a decline of about 15 points. Moving ahead to commodities, starting with the yellow metal, the gold found some support over the last week's total decline, and bounced back from 12.25 an ounce, with about roughly $10 per troy ounce today. Silver following as usual, and we are to see a correction to the prices for the week in a positive way, as per our technical indicators, of course. The energy sector, as usually, we're following the WTI crude oil, where prices have found a solid support at the $90 per barrel price, which is a major psychological level, and it was also the low from the start of the year, from January this year. The US president has announced military action versus the Islamic State in the Middle East. We are expecting some revival of the sweet oil prices for this week's price action. The crude has moved with about half a dollar per barrel already today. Remember, the US stock change comes out tomorrow in the global economic calendar. The natural gas has lost some around 20 pips last week, and is currently showing some positiveness in its prices, but only enough to hold the last week's drop. The current price is $3.87 per British terminal unit. Just a few movers from the economic calendar for today, with the euro trade balance, and also in the United States, industry and production reports. A couple things to keep an eye on. A significant week for news traders. The calendar is full with news of this week. Starting with the cable tomorrow, the ECB is going to have some major announcements. The US is showing some retail numbers and indicators. But also one of the most important things in the UK is the outcome of the votes for Scottish independency. This is going to come out, I think, this Thursday. So stay tuned. That was all from me from today. I wish you a successful trading day. Cheers and bye-bye.